As we gear up for AMD's earnings tomorrow after hours, it's important to keep in mind the tumultuous landscape of the semiconductor industry. Despite expectations for earnings per share of 67 cents and revenue of 5.52 billion, there are valid concerns about the continued struggles in the sector. Will AMD be able to break through and deliver on strong results, or will it succumb to the
We
industry-wide
like the stock.
difficulties? I mean, we saw Intel really shit the bed last week, and is that a symptom of the industry or just a one-off? What's going on, everybody? Welcome to On the Chaos. My name is Brad, and stay tuned as I dive into the numbers here and analyze the future of AMD in the ever-changing tech market. While everyone is seemingly cautious about what's to come, I'm actually a little bit different, taking a different approach here. I'm going to be keeping a close eye here on AMD's purchase obligations, inventory levels, segment financials, and management's outlook for the coming year to really get a complete picture of the chipmaker's performance and where the shares might be headed next. First, there's the future of AMD's financials. As we prepare for AMD's earnings release tomorrow, it's important to note the current state of the semiconductor industry, facing inflation, rising interest rates, and weakened consumer demand for the computing devices. With research firms Gartner and Canalys reporting a decline in PC sales in Q4 of 2022, it's possible that AMD's gains in market share against competitors Intel and Nvidia may not be enough to counteract the industry's overall decline. But to gain a deeper understanding of AMD's performance, investors should really keep an eye on the company's inventory levels. A sudden increase in inventory could indicate the mismanagement of demand, but a decline or steady level suggests that proactive measures have been made to adjust to production orders. Similarly, monitoring AMD's purchase commitments, its agreements with suppliers can offer insight into the company's outlook for demand. While production orders may not always be fully cancelable, it's expected that AMD's inventory levels will rise slightly and its purchase commitments will decline as the company pivots to a more efficient operating model for fiscal year 2023. With these factors in mind, let's now delve into AMD's financials. Next, we have their revenue streams. AMD has 4 revenue reporting segments: data center, client, gaming, and embedded. Gaming is the largest contributor to sales, making up 29% of total revenue last quarter. The gaming segment includes sales of discrete GPUs for crypto miners and gamers and semi-custom SoCs, specifically for Xbox and PlayStation. And mainstream gamers are expected to wait for budget GPUs under the 7000 series, which was expected in Q1 fiscal year 2023, which also may slow the gaming segment's growth to 10% in Q4 and revenue to just 1.79 billion. Data center revenue has consistently grown thanks to the successful rollout of the data center accelerators. This trend is expected to continue with a 5% sequential increase in Q4 and revenue of 1.69 billion. Those embedded sales, including FPGAs, adapted SoCs, and ACAP products, are expected to grow 2% in Q4 with revenue of 1.32 billion. The client segment, comprising of microprocessors and APUs for desktops and laptops, is expected to actually decline 35% sequentially due to peak PC demand and Q4 revenue of just 664 million. This results in a company-wide revenue estimate of 5.47 billion, in line with the consensus range of around 5.42 billion to 5.74 billion. Investors should watch AMD's management outlook for Q1 fiscal year 2023 and beyond to gauge whether they plan to cut back orders due to the recession or maintain production for a quick demand recovery and market share gains. Now, as always, I like to pose the risks that come along with any stock, and AMD certainly isn't without them. So here goes. Although the geopolitical risks have temporarily decreased, the relationship between China and the U.S. could still deteriorate, potentially affecting the semiconductor industry. The Biden administration has put in place restrictions on chip exports to China, which other countries such as Japan and the Netherlands have agreed to follow as well. Additionally, Xilinx chips have been found in Iranian drones used against Ukraine, which could draw regulatory attention. Investors should also keep in mind that the geopolitical risks are unlikely to disappear completely. Despite recent efforts to improve relations, the future of Sino-American relations is uncertain, and there are no guarantees that they won't worsen after 2023. As such, AMD, with its exposure to the Chinese market, 25% of revenue last year, and Xilinx, nearly half of its Asia-Pacific region, including Japan, will likely face geopolitical risks for years to come. But next, let's review the chart and review some of my technical analysis for AMD and where I think this could be headed. All right, so as you're looking at the chart here, this is the weekly chart for AMD. So each one of these candles represents 1 week. So I'm looking back here at the top. right? Back in December of 21, right before all of tech kind of really took a shit here. And I'm looking here, and it's we've seen a significant downtrend, but things have changed recently. We've seen things start to shift up. Now we are at a bit of an inflection point here for AMD. One of the things that I'm keeping my eye on is a potential death cross here, one in which you see this 50-week moving average starting to turn down and potentially cross over the 200-day. That is actually a very bearish sign if that cross potentially happens. What could change that, obviously, is the sentiment here. If AMD comes in and says, hey, guess what? Our guidance is great. We have a pretty decent outlook for 23. We're not in the same camp as Intel, some of the other semiconductors that have reported poorly. We're fine. Then I think that we start to have a bit of a more conversation on this trend change. As you can see, we've seen nearly a 40% move from AMD from its bottom at 54.57. As of this recording, it's trading at $73, down a little bit today. And so I think that this move above the 200-week moving average could be significant, especially if they come in with positive earnings. So these are going to be two interesting areas to watch. If earnings are bad and this death cross takes place, I think there's a strong possibility that AMD actually retests this $55 level. But then if we get positive earnings results and a great outlook, then I think a move over that 200-week moving average could come into play here, and a trend change could also be very much in the cards. And I could see a very easy move all the way up to about $100 in the coming weeks for AMD, as long as things remain positive. Now, keep in mind, we also have the Fed meeting this week that could impact a lot of these stocks, specifically in tech. So that is also one other thing to consider. Finally, guys, AMD shares are valued at a price to sales multiple of 5.3, which may appear high, but is relatively low compared to its peers in the semiconductor industry. Look no further than Nvidia. Despite facing a slowdown in demand, AMD's long-term growth potential and attractive valuations make this a worthwhile investment, in my opinion, for those with a multi-year outlook especially. However, before making a purchase, it's advisable to keep a close eye on the company's inventory, commitments, revenue by segment, and management's outlook in the future. This information will give a clear picture to the growth prospects, and this is one in particular that I am definitely looking forward to in these upcoming earnings. So be sure to tune in tomorrow as I cover these earnings live at 3:45 p.m. Eastern time, and I'll see you guys there. Bye.